All right, welcome back to another explainer. Today, we're jumping straight into the explosive growth of Yatharth hospitals. We're pulling these insights directly from their latest FY26 earnings presentation, and honestly, we're going to look under the hood of one of North India's fastest-growing super specialty healthcare providers to figure out exactly how they're scaling at this speed. Seriously, if you're looking for a masterclass in business scalability, well, this is pretty much your textbook.
So let's just kick things off with a number that's frankly hard to ignore: 188% shareholder return since they went public. Now, in the highly capital-intensive, notoriously tricky world of physical healthcare operations, generating that kind of alpha, it doesn't just happen by accident. Building hospitals takes massive amounts of time, cash, and serious regulatory navigation. So a return like this, it turns heads for a very good reason.
Right, so this isn't just a stroke of luck. It's the byproduct of a hyper-calculated expansion playbook and, honestly, just ruthless operational efficiency. They're actively evolving from a regional player, mostly focused around Noida, into a sprawling healthcare empire, and they're executing this vision with absolute precision. We are talking about a level of operational scaling that is traditionally incredibly slow for brick-and-mortar hospitals.
Here's the roadmap for today's explainer. We're covering 1. Their explosive FY26 financial results. 2. The operational core. 3. Strategic cluster expansion. And finally, 4. Strengthening governance and trust.
All right, let's jump straight into Section 1, Explosive FY26 Financial Results.
And this right here perfectly captures the sheer scale of their boom. Their annual revenue didn't just tick up, it completely surged. We're looking at a massive 36% year-over-year jump, climbing from roughly 8.8 billion rupees in FY25 to blasting past the 12 billion rupee mark in FY26. I mean, to see that kind of aggressive growth trajectory in a heavy infrastructure business, it's incredibly rare. Usually expanding a physical footprint is a really slow burn, but they've somehow managed to hit the fast-forward button.
But hey, top-line revenue was only half the story, right? Even more impressive is what's happening at the bottom line. Just looking at the fourth quarter alone, their profit after tax absolutely soared by a staggering 47% compared to the same period last year, hitting 447 million rupees. What this tells us is crucial. They aren't just burning cash to buy growth. They are scaling profitably, and they're extracting some serious operating leverage from their assets.
Which brings us to Section 2, the operational core.
Now, before we check their vital signs, let's quickly define a term you'll see a ton of in healthcare economics. It's called ALOS, or average length of stay. Think of this as the absolute heartbeat of hospital profitability. Basically, a lower number means you're treating patients effectively, getting them safely discharged, and instantly freeing up that bed for the next admission. It is the ultimate measure of operational velocity.
And get this, Yatharth has fine-tuned their operations to an amazingly lean average length of stay of just 4.16 days for FY26. They are moving patients through their care pathways with pinpoint efficiency. And honestly, this is the exact engine driving those expanding profit margins we were just looking at. For operators and investors, this is a massive green flag, signaling a highly optimized clinical workflow.
And you've got to keep in mind, this kind of efficiency isn't happening in some tiny boutique clinic. It's running across a massive footprint. We're talking about managing over 2,800 beds with a super robust 68% occupancy rate across their entire network. Maintaining that level of throughput at such a huge scale, that's a major testament to how strong their operational core really is.
On top of that, they are actively maximizing the value of every single one of those beds. While the group's overall average revenue per occupied bed, or ARPOB, sits at around 33,283 rupees. Just look at their newer facilities. By pushing into premium markets, their New Delhi and Faridabad Sector 20 hospitals are pulling in yields of approximately 38,000 and 40,000 rupees respectively. They're effectively shifting their entire business mix toward a much higher-paying 100% cash and insurance patient base.
Okay, let's move into Section 3, Strategic Cluster Expansion.
Let's trace how they're physically mapping this out. They started by totally dominating Noida early on, launching their Greater Noida facility back in 2010, and then hitting Noida Extension in 2019. Once they built an absolute stronghold there, they didn't just sit back. They started aggressively seeding new clusters, expanding out to Agra for 2026, and already setting their sights on Gurugram for 2027. This geographical plotting is, without a doubt, incredibly deliberate.
Take a look at their recent Agra acquisition. They snagged a 100% stake for 260 crore rupees, instantly adding 250 beds to their portfolio.
But the real genius here is the underlying strategy. It's a textbook hub-and-spoke play. This new hospital taps into an underpenetrated market and is specifically designed to capture highly complex, high-revenue oncology and organ transplant cases right at the source, before funneling them directly into their core hub hospitals in the NCR region.
And looking just slightly ahead, their next major flag in the ground is this upcoming ultra-modern 250-bed super specialty facility in Gurugram, which they expect to have up and running by April 2027. It represents a massive, massive leap in both their architectural and clinical ambitions.
Honestly, this Gurugram facility is probably their most ambitious swing yet. They picked up a 100% stake for 100 crore rupees with a proposed total outlay of 200 crore. By strategically dropping it in a high-income, hyper-dense catchment area right near the IGI airport, they're explicitly targeting both wealthy domestic patients and international medical tourists. Because of this prime positioning, they are projecting an enormous ARPO potential of over 50,000 rupees for this single facility alone.
Which leads us nicely into Section 4, strengthening governance and trust.
To future-proof this rapidly expanding empire, Yatharth hasn't just been pouring money into buildings. They've been heavily investing in oversight. They've brought in absolute heavyweights to run their governance, appointing MSK and Associates as statutory auditors and tapping Deloitte to run their internal audits. This is a very loud, very clear signal to institutional investors that their massive growth is backed up by rigorous, global standard financial scrutiny.
And you know what? The financial markets have absolutely rewarded this commitment to governance and profitable growth. A huge milestone in this journey was their recent inclusion in the highly prestigious MSCI India Small Cap Index. Basically, this puts them squarely on the radar of massive global passive funds. It drives liquidity and completely validates their position as a heavy hitter in the Indian healthcare sector.
So, we've seen the massive 36% revenue jumps, the elite operational metrics, and the aggressive push into premium markets. Plus, they're sitting on an operating cash flow that just surged 82% year over year. Which leaves us with one final, pretty provocative question to ponder as we wrap up this explainer. Armed with this massive war chest of cash and a totally proven playbook for replicating success, where exactly will Yatharth hospitals plant their flag next? Thanks so much for hanging out with me today, and definitely keep your eyes on this fascinating growth story.